Good day, everyone. This is Patrick from EasyFX Code Trading System, and this is Saturday, the 27th of May, 2023. And it's the weekly technical analysis for the euro, the cable, and the Aussie dollar for the 5th week of May. And finally, we see further bearish momentum to break the next support, the previous support. It has been breaking through all these supports for the last 3 weeks now, and getting closer to potential key support area. So cable especially has finally broken through the daily 55 EMA, which has been very supportive. And the Aussie is the major casualty here, with very, very weak move lower down to the 65 round figure. So all falling, which means that the US dollar has strengthened, and we should be able to see that in the US dollar index chart. So let's take a look back last week to see why this has happened and what triggered all these further bearish moves. And also take a look at what's up for this coming week, the final week of the month. Okay. So last week, the main story is that the US economy is still very resilient, and doesn't seem that the recession is coming up soon, and inflation is still fairly high, which is a cause for concern. So with a fairly strong economy, and which will contribute to higher inflation, then this would be a cause for concern for the Federal Reserve, and they may need to increase rate one more time in next meeting in the next month, June 14. So that is a worry for all the markets, and the major pairs have sold off as a result, including spot gold. So flash PMIs to start with at the beginning of the week, and the key news is the services, 55% versus 52, much stronger than expected. So the US flash services PMIs is always the main driver in the economy, even though the manufacturing came in slightly lower than the 50 mark. And then, as well as on Thursday, the preliminary GDP figure was stronger than expected. It was higher than expected with 1.3%. And then followed on Friday with the PCE price index showing no signs of abating yet, still hovering between 0.3%, 0.4% increase month over month. And this is going to be a key indicator for the Federal Reserve to act on tightening their monetary policy further. Later on, the durable goods orders also higher than expected versus a negative forecast. So overall, the US indicators are all flashing positive, and that's why the US dollar has been pushing up for the 3rd week now in a row now. Another cause for concern for the UK, where the CPI came out much higher than expected, 8.7 versus 8.2. So this will be further fuel for the Bank of England to increase rates, and at the moment it's at 4.5%. This could trigger further increase in the next meeting, June 22nd, to perhaps continue for a couple more months of rate increases to try to push it up to 5% as well. So it's we'll see a couple more weeks down the road. So coming up next week, we have more CPI figures from the other economies, from Australia and the Eurozone. And then, of course, the non-farm payroll report on Friday, where they are forecasting a conservative 189,000 versus the actual the previous month of 253. And it has been fairly strong for the last few months, staying above 200,000. And so this would be a bit conservative and could still beat this forecast. Unemployment rate, they did forecast slightly higher. So we'll see whether this will be another key indicator for the Fed's upcoming meeting. Monday is Fed will be very quiet. Of course, there's holidays all around the major economies from the Eurozone, UK, and the US for Memorial Day holiday. So markets will be quiet and closed as well. At least for the stock market is closed. But for Forex market, it will be low liquidity. And consumer confidence figures on Tuesday, we'll see whether it's going to beat this lower forecast as well. Okay, so major news will be the NFP, and then for the other economies, CPI estimates. All right, let's move on to the analysis. Let's begin with the euro. And it has finally broken down below this interim with support here at 107.67. And this was from all the way back from the swing low of 2 years ago or 3 years ago. So. And that has been a key resistance and then support. And it did bounce off it the previous week before finally breaking down on Wednesday. So it dipped through below the 62 FIB retracement now and moving closer to the daily 200 EMA. That's going to be a key support level. So all these will be very safe for now. There's strong support levels up here. Let's move this one out. So it needs to climb back up above 108 to make any serious rally and recovery, and as well as breaking up above the daily 55 EMA at the 108.50 area to try to retest the 38 FIB retracement. But the daily 200 EMA at 106.85, that's going to be the next key support, and it could just be only an interim support, as the next key support is going to be the next FIB at 78.6 FIB, and that's at 106.40. So we move this interim support down here Okay, Thursday we have the CPI flash estimates for the Eurozone, and then the non-farm payroll will have an influence on the euro as well on Friday. So this will be the key range to watch out for 108 and the daily 200. If it does, we'll probably pull back up first to retest after spinning top on Friday, retest the breakout level for attempting to test the 200. And if it does break, it should find support at the 786 fib. And if it's going to recover, it needs to break out past the 108 and clear that. Find any bullish interest. Okay, again, the daily 200 EMA is likely the next target at 106.85, and on the weekly time frame, and it's sitting right on the weekly 55 EMA. So that's aligns with the daily 200 EMA. So we'll see if this level breaks, and then try to test the swing low of this previous week down to the 786. But yes, it's after the doji third time test of the weekly 200 EMA, and it has fallen for the last 3 weeks. So likewise, we'll probably see the US dollar index rising for the past 3 weeks as a negative correlation or inverse correlation. But we shall see how weak this is going to be. The ECB's turn for their meeting is going to be the 15th, the day after the FOMC next month as well. So we'll see whether they will continue with their rate hikes. Okay. So for now, we'll leave the fibs as it is and watch for these interim support levels and some of the key levels at the next support. Let's move on to compare this with the US dollar index, the DXY. All right, let's take a look at the US dollar index. And right from the start of the week, it has been recovering and climbing all the way back up to test the 104 level now before pausing yesterday and finally breaking through the daily 200 EMA and the 62 fib retracement. There could be some more bullish momentum to break above the 104, and if it does, then it may target the 786 retracement at 104.40, and that aligns with this area here at a swing high. So we'll see whether there's a continuation move next week. On a weekly time frame, that's another bullish move. It's 3 consecutive weeks, just like the euro falling for the past 3 weeks. So since breaking out of this ascending triangle, it has been forming and consolidating for 2 to 3 weeks. Yeah, for 3 weeks before breaking out. And this interim resistance at the previous swing high, tested twice before, that swing highs, and that's a key resistance that is broken through. So at this level, so let's see this coming week whether it's able, this breakout from the daily 200 is able to hold and then continue to move up to test the 786 before consolidating, perhaps consolidate around the 104. So from the 103, probably 40 level. Yes, that's the 103.40 level. And let's try to target the 104.40 level. So let's see if this support can hold. And let's move this into this zone for support. Move this one up to the 103 and the 50 pip retracement for key support now, just below 103. And we'll move for the next one up here at the daily 55 and the 38 pip retracement. So above this, let's also add the next key resistance. Okay, let's move this away. All right. So only one major news next Friday, non-farm payroll report, and see if there's any follow through in the bullish momentum after 3 weeks of a bullish move already. Could be another half week of a move just to hit the 786 before some consolidation. So we'll see what happens next week then. All right, let's move back to the other major pairs. Moving on to the cable. And the cable has been one of the more resilient pairs and avoiding bearish moves until the break on Wednesday. And that was breaking below the daily 55 EMA. And it has been consolidating and holding up for quite a while. Just between the resistance at the 125, although it's been making lower and lower highs, finally broke down, and it didn't quite reach the 123 round figure, but it did hit the 76 pip retracement at the 123.10 area. So hit the fib exactly. And we'll see whether this week there's any recovery from there, whether it's just going to climb back up to retest the daily 55 before attempting to break down and target the daily 200 EMA. That's going to be the key support zone. And if it does recover, it needs to break through the daily 55 and as well as this previous swing high at the 100 pip and back up towards the 125 round figure. Otherwise, it's still going to be fairly bearish throughout next week. It could try to consolidate and form a base before attempting to recover as well. So we'll see how low it will drop next week. And plus there's another swing high support now that it needs to try to break down through. It's at 122.70. So that's going to be a critical zone of support down to the daily 200 EMA at 122.45. 123, this area is going to be an interim support. Like the 123 line. And up here is going to be interim resistance now at the daily 200, daily 55 EMA, with the major resistance still at the 125. Now it can also break through the daily 200 and target the 62 fib, and that's right, almost right at the 122.00. So that potentially could be another target area. It's right at the 62 fib retracement. So need to watch out for that as well. If it does break through the daily 200 EMA. So no major news from the UK economy, except it's going to be influenced by the non-farm payroll report on Friday, but we'll see how far it will drop. It still has a few more weeks before the Bank of England's meeting. But since the UK CPI report on a Wednesday, which initially did attempt to climb up higher, but then gave up its gains and fell below the daily 55. So that Wednesday drop was due to the UK CPI figure, and then exacerbated by the US news on prelim GDP on Thursday, and then the PCE on Friday, yesterday. It did climb back up to try to recover, but just to retest the daily 55. So a key one to watch this coming week for the cable, and it's sterling pairs. All right, let's move on to the Aussie dollar. And this week, there's the Australian CPI figure to watch out for on Wednesday before the non-farm payroll report on Friday. So it has fallen since Tuesday, since the flash PMIs Tuesday, and fell below the 66. And finally, all the way down to 65. So that's a major setback for the Aussie dollar. Finding support on Friday, hanging around the 65 level. But this is a significant fall now. been past our key support level. So let's identify this as the critical support at 65, and so this zone is now an interim resistance, and the key resistance now at the 21 fib and the 67 round figure. You can safely remove this for now. Still. Okay, so we could also, we need to flip this over because it's gone past the 0 fib. So if it does extend further, the 138 fib is well further down at 63.37. So perhaps we could find a smaller reversal move with on a shorter time frame. And this reversal may target the 162 fib at 0.6422. So that could be another key support down here at 64.22 before it hits 64. And then further down, if it does break below 64, there's almost a confluence between the 200 fib and the 138 extension of the larger fib, falling down to the 63.30 area, 63.30 to 40 area, but we won't go that far yet. So we'll watch out for this area at 65, down, moving down towards the 64. And let's change this to a dashed line here. Okay. All right. So previously the swing high was just above the 68. And the swing low is just below 66. So from this range, it's breaking down. And this is a 200 pip range or 200 plus. So it could easily extend down to the 64. So we'll see. All right. So do check out my other videos on spot gold and dollar yen. And have a safe week and a good trading week. And cheers for now.